right, I am showing it is our scheduled start time, so we are going to go ahead and move forward with our webinar today entitled Helping You Make Sense of Compliance. My name is David Lindgren. I am the Senior Manager of Compliance and Public Affairs at Flexible Benefit Service Corporation. Just want to go over a couple of housekeeping items before we get started today. If you are listening to the audio portion by phone, please be advised that your phone line has been muted and will continue to be muted throughout the duration of the presentation, simply to eliminate any background noise. And if you are listening to the audio portion of the presentation through your computer speakers, please be advised that the quality of the audio is based on the speed and connection of your internet. So if you do experience audio choppiness at times, I would encourage you to click on the event info and dial in and hear the remainder of the audio portion through your phone. If you do have any questions during the presentation, please go ahead and type those into the Q&A or the chat function, and I will address as many of those questions as I can at the end of the presentation. Just a couple pieces of information about the organization that I work for. We are Flexible Benefit Service Corporation, but we simply go by FLEX for short. We classify ourselves as a general agency and a benefits administrator. On our general agency side, we work with insurance brokers and agents throughout the country, helping to support them and find affordable health plan solutions for their employer clients as well as their individual health plan clients and Medicare clients. On our benefits administration side, we do a lot of administration as it relates to cafeteria plans, as it relates to COBRA administration, as it relates to other plan type administration such as FSA, HRA, HSA administration. We also offer a number of different compliance services. For example, we do non-discrimination testing, and we also prepare cafeteria plan and ERISA plan documents for employers. So some organizations use us for a whole spectrum of products and services, everything from the group health plan all the way through the administration of their plan. And other organizations or other brokers just refer their clients to us, maybe for one or more small pieces of their overall benefits package. We really don't care which option you choose. We just want you to know we're there to give you a hand if you need assistance with any of these products or services. With that being said, I just want to move into our presentation here today. I've got some maybe 20 minutes or so of material I want to cover with you on the current state of compliance, and then want to talk to you and show you a little bit of a new compliance product offering that we have to help employers handle and administer their overall compliance requirements. So when we take a look at an employer who decides to offer a group health plan, and we know many of you on the call do, or if you're a broker and you're on the call, you are in that marketplace where you're helping your clients find a group health plan solution. And lots of time, of course, is spent in putting together the appropriate plan design and weighing in plan costs and how to juggle those two tasks so that you're providing a benefit that's perceived of high quality to your employees. But it doesn't really end there. Of course, there's a lot of time and effort spent at renewal figuring out the best plans and products to offer. But once an employer decides they are going to offer a group health plan to their employees, they are then subjecting themselves to a number of different rules and regulations. And I have a handful of them listed here, but anything, of course, from the Affordable Care Act that we've been dealing with largely for the last couple of years with implementing to administering COBRA coverage through, or administering continuation coverage through the COBRA federal regulation. There's the ERISA law that's been around going back to the mid-'70s that has lots of different rules and requirements. And I won't go through the entire list here, but there's several different rules, and that's sort of the first point to take away is that if you are offering a group health plan, you have to take into consideration there's several different laws that may impact what you have to do from an administration and benefits standpoint. Now, the unfortunate thing about all of those rules and regulations is that they don't apply universally, meaning they don't always apply exactly the same way from one organization to the next. Some examples here, and I'm going to elaborate on each example, is that there's lots of different laws, as you just saw, And many of those laws have different notices and disclosures. And those notices and disclosures are contingent upon the unique characteristics of the employer as well as the different plans that they offer. So certain notices may apply to one organization but not necessarily to another. Some of the rules are based on the size of the employer. Generally, the larger an employer gets, there are more rules that apply. Of course, we have the Affordable Care Act that has now, we have two different plan classification types under the Affordable Care Act. We have grandfathered plans, which are those plans that were in existence prior to the passage of the Affordable Care Act in March of 2010 and have not been significantly modified since that time. And then we have non-grandfathered plans, those plans that have been secured on a date on or after the passage of the Affordable Care Act. Then depending on how you choose to fund your plan, self-insured plans are regulated a little bit differently, at least with respect to some rules, than our fully insured plans. Many larger employers have self-insured plans. They find that to be a more cost-effective way to offer coverage, but there are some different rules that come into play. And with the Affordable Care Act and some of its requirements, a lot of even smaller, medium-sized organizations are starting to look at those self-insured plans. Then renewal dates or your plan year, your effective date of your plan, that can determine the timing of specific compliance requirements. Certain things have to be done either at or around that renewal or within a specific time period after that renewal date or that plan year. And then most employers that are offering group health plans do choose to allow their employees to pre-tax their premiums through a cafeteria plan. And you have to understand that if you do that, which most do because there's a tax benefit to it, there are some compliance requirements that come along with that. And the list goes on and on and on. And I just want to go through each of these bullets that you see and talk about how the rule may not necessarily apply universally from one employer to the next. So I first talked about notices and disclosures. Depending on, again, the unique characteristics of your organization and the plan types you offer, there could be upwards of 20 different notices and disclosures that may need to be provided to at least certain employees at certain times. And I didn't list all 20 just because I didn't want to overwhelm you and overload the slide with text. But I have listed a handful of those notices and disclosures that need to be given. For example, under the ERISA law, a summary plan description has to be provided to employees at certain times. Under the Affordable Care Act, there's a different summary document referred to as a summary of benefits and coverage that has to be provided at different times. If you have any Medicare-eligible employees or any Medicare-eligible employees who have spouses or children that are eligible for Medicare, there's a Medicare Part D notice that needs to be provided. To the extent you rescind coverage for an employee, there's a notice of rescission. The Affordable Care Act has certain patient protections, and you need to describe those patient protections in writing. If your plan is grandfathered, you need to indicate by virtue of a notice that your plan is grandfathered and what that means. You do have to indicate what the special enrollment rights are in the form of a notice to those employees as to when they can get onto the plan outside of open enrollment. For those of you that are subject to COBRA, there's a general notice that you have to provide at certain times. And then if you offer a wellness plan, there's a wellness notice. And again, the list goes on and on. It's just depending on your unique situation, the makeup of your employee, how many employees you have, and so forth. There's a lot of different notices that can come into play. And when it comes to the notices, the timing is also an important compliance factor. Depending on what the notice is or what the event is, that's going to determine when the notice has to be provided. In some instances, you need to provide the notice upon an employee becoming eligible for coverage. In some instances, it's upon them enrolling in coverage. Some notices are required to be distributed annually, typically with open enrollment materials. Some notices only have to be provided if certain events occur, and then other notices need to be provided upon request. Another interesting thing when it comes to just these notices and disclosures and plan documents is that both the IRS and the Department of Labor have issued rules around how and when you can distribute these notices electronically. Generally speaking, if your employees regularly have access to a computer and they're regularly, a typical office worker, we'll call them, then those notices in most instances can be emailed or posted in an intranet or a shared drive, as long as the employees are made available where to access those forms. But if you have a lot of employees who maybe don't regularly work in front of a computer, maybe they're a manual labor worker and they're outside in the field working, then those notices typically can't be provided electronically unless the employee gives consent and unless that employee provides you with a specific email address where those notices can be distributed. So not just the notices, it's about how they need to be distributed and when they need to be distributed. Then size is a factor when it relates to what rules apply. I mentioned that already, that typically the larger an employer gets, the more rules apply, and the smaller you are, there are some exemptions from those rules. So I've got sort of a handful of regulations here that I'm listing based on employer size, but I've got COBRA as one rule that generally applies to employers that have 20 or more employees and offer group health plan coverage. Got Medicare secondary payer rules, or MSP rules. Those are rules that determine which plan is primary or secondary when an employee is covered under a group health plan and also Medicare. Typically for your actively employed workers, the group health plan is primary for employers that have 20 or more employees, and the group health plan is secondary for employers that have fewer than 20 employees. Then we have the employer mandate, which I'm sure many of you have dealt with on numerous occasions over the last couple of years. That's going to be based on employers that have 50 or more full-time equivalent employees in the prior year. We've got the Family Medical Leave Act. That applies to employers with more than 50 employees on 20 or more business weeks in the current or previous year. Got Form 5500 reporting, a Department of Labor requirement where employers that have generally 100 or more participants on their plan need to submit reporting to the Department of Labor about their plan benefits. And then there's W-2 reporting. While that applies to most employers, it only applies to employers that have 250 or more employees, or are issuing 250 or more W-2 statements, I should say, to report information on the total value of health plan coverage. I mentioned grandfather plans. It's something many of us have been dealing with since the passage of the Affordable Care Act. And a grandfather plan, of course, is one, as I mentioned previously, that was in place since March 23rd, 2010. That's the day the Affordable Care Act was signed into law. It has not been substantially modified since that time. Very slight modifications can lose grandfather status. For example, increasing the copay of a plan by $5 or more could lose that grandfathered status. So very hard to maintain grandfathered status now that we're several years since the passage of the law. But I mentioned that grandfather plans are subject to a different set of rules than non-grandfather plans, or I should say they're exempt from some sets of rules that non-grandfather plans are not. And just an example of some of the things that grandfather plans don't have to comply with as it relates to the Affordable Care Act is covering preventive care at 100%. The grandfather plan can still cover those with out-of-pocket costs or make preventive care subject to the plan deductible. The Affordable Care Act sets a maximum out-of-pocket limitation, the total amount of copays, deductibles, and coinsurance that someone would have to pay for in-network services. Grandfather plans are not subject to those maximums, so whatever maximum they had in place prior to the Affordable Care Act is still compliant with the regulation. Grandfathered plans do not have to provide coverage for approved clinical trials, whereas non-grandfather plans generally do. Grandfather plans are not subject to expanded claims appeals processes, whereas non-grandfather plans are now subject to expanded claims appeals processes that include external appeals. And grandfather plans are not subject to adding additional patient protections, whereas non-grandfather plans do. For example, a grandfathered plan does not have to cover out-of-network emergency care at the in-network levels, whereas non-grandfathered plans do. So starting to get a little bit overwhelming, I'm imagining. I also mentioned that self-insured plans are subject to a different set of rules than fully insured plans. And part of that reason is that self-insured plans are not regulated by state law. They're only regulated, I don't want to say only, but the primary regulatory statute that self-insured plans are subject to is ERISA. And most employer plans are subject to ERISA. There's some employers who are not subject to ERISA. For example, most public employers are not subject to ERISA. But with the self-insured plans, ERISA applies, Form 5500 reporting applies unless there's an exemption. But self-insured plans have specific non-discrimination rules that apply. And when we say non-discrimination rules, it's making sure that the benefits or the coverage that's available does not discriminate in favor of highly compensated employees. And also with self-insured plans, those employees that are involved with the handling of funds, typically plan administrators, they may need to be covered by a bond. So that's something that's oftentimes unique with the self-insured plan. And with fully insured plans, they're regulated by state law. So they don't get that exemption like self-insured plans do for state law. But fully insured plans are also, in most scenarios, subject to ERISA unless an exemption applies. They are also subject to Form 5500 reporting unless an exemption applies. But one thing unique with fully insured plans, at least as of today, is non-discrimination rules don't apply. So you don't have specific requirements in place today that says an employer can structure a plan that discriminates in favor of a highly compensated employee when the coverage is fully insured. And you'll see I do have that in parentheses, yet, as part of the Affordable Care Act, non-discrimination rules are supposed to apply to fully insured plans. They've just been postponed and delayed indefinitely. So at this time, they do not apply. And with fully insured plans, typically there is no bonding requirement. So renewal dates, one other thing I mentioned, renewal dates, plan year, whatever term you prefer to use is okay with me. But when we talk about when a plan's effective date or the renewal date, this determines the timing of certain compliance activities. For example, most employers have to do Medicare Part D reporting within 60 days of the start of each plan year. So as an employer, you need to be reporting to the Centers of Medicare or Medicaid Services whether the prescription drug coverage you offer to your employees is at least as good as or better than the standard Medicare Part D plan that an employee could purchase on their own in the individual market. And the reason that reporting is required is because if employees delay enrollment in Medicare Part D when they're first eligible, they're subject to a late enrollment penalty unless they have other creditable coverage through an employer plan or elsewhere. So this is an obligation that occurs within 60 days of the start of each plan year, as well as at certain other times. To the extent you're subject to Form 5500 reporting, you need to do that reporting by the last day of the 7th month after the plan year ends. So as an example, if you operate a calendar year plan that renews January 1st of every year, your Form 5500 reporting is due by July 31st of each year. COVID general notices must be provided to any newly enrolled participant within 90 days of plan entrance. So if you're coming up to your open enrollment and your plan is going to be renewing on January 1st, all of your new employees that are enrolling in the plan for the first time need to get that COVID general notice within 90 days. And then also during open enrollment, as well as at other times, but of course with open enrollment, you need to make sure you're providing that Affordable Care Act Summary of Benefits and Coverage, also known as the SBC. And then pre-taxing premiums. Right? Most employers are going to allow their employees to pre-tax premiums. It makes sense. It saves everybody money. It saves the employee money, but it also saves the employer money because the employer is not having to pay Medicare and Social Security taxes on those pre-tax premium contributions. So it's sort of a win-win situation when both the employer and the employee can reap tax benefits. But if you are going to allow those pre-taxing of premiums, the IRS says there's certain things that you have to do. For example, you need to make sure that you have a plan document in place. The IRS says without a cafeteria plan document, sometimes referred to as a Section 125 document or a premium-only plan document, says without those documents, you don't have a cafeteria plan, meaning you should not be allowing those employees to be pre-taxing premiums, and there could be the potential to back pay taxes to the extent you don't have a plan document in place. If you are going to operate a cafeteria plan under Code Section 125, and those employees do make those pre-tax salary elections, they cannot change those elections unless they have a specific qualifying event. So they're really locked into that pre-tax election for the rest of the plan year, again, unless there's a certain qualifying event. For example, if an employee was divorced from their spouse, they would be able to reduce their cafeteria plan election to the extent that spouse was not covered under the group health plan anymore. And then cafeteria plans themselves also have non-discrimination testing just to make sure that those highly compensated and key employees are not benefiting on a pre-tax basis more favorable than the standard employee population. So there's some testing that the IRS says has to be done continuously through the year. So it's not just do it at the start of the year and then it's done. You need to make sure that that plan is not discriminatory for the entire plan year. So typically, best practice is to run the testing at the start of the year, at some point in the middle of the year, and then at the end of the year. So that being said, there's just a lot of things going on, a lot of moving parts, a lot of different laws, and how those laws apply really do vary based on each employer and the particular benefits package that they offer, as well as a number of different unique variables and characteristics. So now we have some government oversight. A lot of the government oversight in recent years has been focused on retirement plans, making sure 401ks and pension plans are being funded properly and the appropriate communications are being distributed to employees. A lot of oversight there in the retirement plan field, and not so much on the health plan side of things, unless maybe there was a complaint from an employee which would trigger some sort of investigation. But that's expected to change. The Department of Labor has stated a goal of auditing every American business for health plan compliance by 2018. Now, that's a pretty lofty goal. Every single company audited within the next 2 years. Is that goal achievable? Your guess is as good as mine. I do know, or I have heard, that the Department of Labor is hiring or has already hired a few hundred people to help in this. So they are beefing up their staff a little bit. And I do know, at least I've seen some other audits that the Department of Labor has done on more of a global scale. And in those scenarios, they oftentimes would just mail a letter to a business organization and ask that plan administrator to go to a particular website and fill out a questionnaire or provide certain information. So that could be a method of trying to do a more of a mass global audit. I don't expect that they would be able to do an on-site audit for every single American business. That just would be impractical. But even if they don't achieve their goal of auditing every company or getting there by 2018, there is definitely an expectation that there's going to be a lot more auditing. And they did indicate that their focus is going to be auditing grandfather plans, making sure grandfather plans are complying with the specific grandfather plan rules. They're also going to be looking at non-grandfather plans, which have some additional regulations that apply to them. And then they said they're going to take a look at other plans, which could include things like health reimbursement arrangements and flexible spending accounts. And many people ask, well, why such an aggressive goal? Why does the Department of Labor need to or want to audit every single American business within the next roughly 2 years. And the best answers that we've been able to gather is, number one, the Affordable Care Act really revolutionized the group health plan and the employer healthcare provided marketplace. It has changed it dramatically, and there's so many new rules that are in place that were not there before, that there's this belief that they want to do their due diligence and just make sure people are operating in accordance with the Affordable Care Act. But a second thing that's come up is that group health plans, employer-provided insurance, is the largest tax deduction in the entire country as a whole. So group health plan receives more tax-favorable benefits than retirement plans. There's more tax deductions that occur with group health plans than, let's say, people deducting their mortgage interest on their tax return. I mean, if you take a look at what can be provided tax-free from a group health plan status, it's the group health plan. You also have health savings accounts, health reimbursement arrangements, flexible spending accounts. You can provide other ancillary related benefits tax-free, such as group dental, group vision, group life up to certain limits, group disability. Those are things that can be provided on a pre-tax basis. Some things don't always make sense to provide on a pre-tax basis, but there's so many tax deductions here. I think the average health insurance alone, excluding all of the other benefits, the average employer-provided health insurance plan for a single person right now is approaching $7,000 a year in premium, and it's approaching $18,000 a year in premium for a family plan. So we're talking about large volumes of pre-tax benefits that maybe it's a good idea to do some auditing to make sure plans are operating in accordance, since the government is losing out on a substantial amount of revenue as it relates to the pre-taxing of those plans. So don't know if they'll achieve their goal, but it is something that they've publicly put out there. So I would expect more employers to get audited in the near future. And there's another big change from a compliance standpoint, and that's as it relates to Form 5500. This is a recent proposed rule. But Form 5500, I mentioned previously, is a form that employers need to complete and provide certain information about their health plan. You know, how many participants are there, how much in total premium was paid that year, if there's a broker involved, how much commission was paid to that broker. So the government uses Form 5500 for a number of different reasons. Sometimes it's just to gather information and statistics. It's to observe trends, what's going on with employer-provided health care, but it's also a compliance tool. So it is, you know, there are certain questions that are on Form 5500 that employers need to attest to that they're doing certain things. And Form 5500, for the most part, generally only applies today to employers that have 100 or more participants on the plan. In some instances, small employers that have self-insured plans, they will have to provide Form 5500 reporting, even if they have fewer than 100 employees. But for the most part, 100 and more employees is who Form 5500 applies to today. And the exemption for the 2 to 99 market is going to go away based on the proposed regulations. So even small businesses, 2, 3, 4 employees that offer a group health plan, if the proposed rules move forward as are expected, they're going to have to do the Form 5500 starting with their 2019 plan year. In addition to losing that small business exemption, the proposed rules are adding a number of different health plan benefits compliance questions that employers will have to attest to complying with. So really they are expanding this reporting, and today Form 5500 is one method that they use of identifying businesses that they might want to audit as well. So just be on the lookout for those proposed rules and their potential finalization. So I've went through a lot. I mean, probably a little overwhelming amount of information in this short period of time. So the purpose of this is really to make sure you're aware that there are a lot of different compliance tests that apply, and they do apply uniquely and differently from one employer to the next. And so that's where we want to start helping employers really do as good of a job as they possibly can, or helping brokers who are working very hard to help their employers keep up with the ever-changing laws. You know, we really wanted to find something that could really just help simplify this process. And really, the first question I think we like to now talk to employers about and brokers about from a compliance perspective is, have you identified a to-do list? You know, and so there's really three key compliance considerations that come with a to-do list. You know, the first is figuring out, well, which compliance requirements, which activities actually apply to my organization if I offer a group health plan. And again, those will vary from one organization to the next. And then once you've identified those, understanding when those requirements need to be completed. You know, again, some of these are based on effective dates. Some of them, there's a hard-coded date. They need to be done by a certain date every single year. So not only knowing what to do, but knowing when to do it. And then ultimately knowing how to complete those requirements. But some things are very simple and easy to understand, and other things are a little more complex at figuring out, you know, how exactly to complete specific tasks. So that's where we did some research, and we came across a company called Compliancedashboard. They're out of Indianapolis, Indiana, and they've really created what I believe to be a very slick compliance tool. And it is a customized web-based tool, meaning the information, the compliance information that is provided in there is specific to a particular employer based on a profile that's completed. And the essence of the tool is that a questionnaire is completed, and I'm going to show that to you here momentarily. But an employer completes a questionnaire, or a broker completes the questionnaire on behalf of their employer client and answers a series of questions, you know, related to employer size, grandfather status, self-insured versus fully-insured, and so on. And from there, the Compliancedashboard web-based tool creates a custom calendar and month by month indicates which compliance activities apply. And not only does it create this calendar of compliance activities, it does have an alert system. So as compliance activities become due, it will send an automated email to the user letting them know that there's an activity that needs to be done, and there'll be a hyperlink to click on that activity, and it'll take them right into their dashboard calendar where they can see what needs to be done, when it needs to be done, and how it needs to be done. So it really is, I think, a very unique tool. In addition to the calendar, there's a ton of resources within the tool, you know, such as there's guides, there's checklists for all of those different notices, or I don't know that I should say all of them, but for many of them, to the extent the government has issued a model template notice, there's a model template notice in there that you can use and meet the requirements of the notice distribution. There's links to final regulations and FAQs and so forth. And it really is, I think, one of the easiest ways for an employer to identify their compliance activities and figure out what they have to do to make sure they're complying with the rules and regulations. So I'm going to do just a quick, you know, just a few minute overview of the tool. So I'm going to change my screen here to share an internet web-based application with you. So it's going to take just a second here to switch over. I'm going to give it a few seconds for it to come up on your screen. And for those of you, sometimes when I do share an internet browser, it seems kind of smaller on your side of the screen. So if you want to widen that screen or increase the page size, that might make it a little bit easier for you. But you should see on your screen now I've got my Internet Explorer browser pulled up. And this is the questionnaire that is completed, and this is where the intuitiveness of the Compliance Dashboard tool comes into play. I've already pre-filled out the questionnaire just for the sake of time, just to give an example of what it will look like after the dashboard is completed. But you should see, you know, at the top here where it says Define Plan Sponsor, there's one of 3 different boxes to check off. You know, are you a private sector employer, a non-federal government employer, or a church employer? This is the tool's intuitiveness of determining whether or not the employer is subject to the ERISA law. Non-federal government employers and church employers are exempt from the ERISA law. So, you know, that's one example of how the intuitiveness of the tool works. Then scrolling down a little bit, I think it's, your screen probably shows a few seconds slower than mine, but we've got to make a determination as to how many employees the employer has, and the way that the employer size is calculated can vary from one definition here to the next. For example, if you look at least 50 employees, employ at least 50 full-time equivalent employees, that's really where the system's determining if the employer mandate applies. But right below that, the 50 or more employees, that's where the system's figuring out if FMLA applies. Employ 50 or more employees for each day in 20 or more work weeks in the current or preceding calendar year. So here we have 50, you know, we're talking about employers with 50 or more employees, but there's 2 different ways to calculate that. So we really want to go through here as we're working with the employer and make sure we're answering these questions as best to their ability to make sure we're determining which rules apply and which rules apply. Moving down a little bit, you'll see we're then getting into plan funding. This is where we're determining, do you have a self-insured plan, fully-insured plan? Because again, there's different rules that may apply based on the funding status of the employer. You know, below that, we're looking at the plan anniversary, again, or the renewal date or the effective date, whatever term you prefer to use. Again, there's certain things that have to be done based on that plan anniversary date. Then we have some other questions that we need to look at, making a determination if the employer is subject to COBRA or not. Does that employer have access to protected health information? And if they do, you know, that's going to trigger some HIPAA requirements. Is the employer pre-taxing premiums through a cafeteria plan? Do they have 100 or more participants at the beginning of the year? Do they have a separate trust that they've established in connection with the health plan? Again, I pre-checked off some of these things just to use as an example. Then moving down a little bit further, is the plan grandfathered or non-grandfathered? Does the group health plan require a primary care physician? That's going to impose some requirements. And then there's just a lot of other options that come into play here as it relates to the benefit plan. And does the employer offer these types of benefits? You know, prescription drug coverage, most do. Mental health coverage, most do. Maternity coverage, most do. And then FSAs, HRAs, and HSAs, do those apply at all? Does the employer offer those? Do they have an on-site health clinic? Do they have retiree coverage? And again, pre-check these just to use as an example. At the very bottom there, you'll see a question that says, do you want to add compliance activities for other welfare benefit plans? This is just going to be something that we would answer yes to when setting up the profile for an employer. If the employer had a health plan, had, let's say, 2 different health plans that had 2 different effective dates. Maybe it's an employer that is under common ownership and there's 2 different businesses as an example. And business 1 has a effective date of January 1st, but business 2 has a different health plan that has an effective date of July 1st. So if we have some different effective dates that are in play, we would answer yes there and be able to identify what the effective date is of the other plan. So after we've gone through this, I'm giving you the shortened version, and answered the question, that's when the custom web-based compliance dashboard is created for the employer. So on your screen now, you should see a different web page. And this is what an employer would see if they chose to acquire this compliance dashboard offering. And as you'll see, I'll scroll down a little bit. You'll see the calendar in the middle, marked month by month. It identifies in January which compliance activities apply to this organization. In February, which compliance activities apply. In March, which activities apply, and so on. And you can see that in every single month, there are some compliance activities that generally will apply to a particular employer. So this dashboard is giving you an idea of how many compliance activities could potentially apply to an organization that offers a robust set of group health plans. So I'm going to scroll back up and just open up one or two examples so you can see. I will use, let's see, the month of February, you'll see as an example, Part D report to CMS. So during the month of February, an email would be sent to the user of this particular account, to the employer or the plan administrator, and it's going to tell them they have a Part D report activity to complete, and they can come into their dashboard tool and click View Activity. And then within that activity, it'll tell them what the deadline is to start off. So you'll see here on the screen the activity must be done within 60 days after the beginning date of the plan year. So if you recall in the example, we indicated this employer had a January 1st effective date, and that's why it's showing up in the month of February. This is going to be within 60 days of the start of the plan year. And down here, it's going to give some sort of general information about the Part D reporting. It's going to tell the employer that group health plans that provide prescription drug coverage must disclose to CMS whether the coverage is creditable or not. And so just telling them that they have a reporting obligation. Then below this, what should you know? It provides some information here that says when you need to provide it. You got to do it on an annual basis as well as at other certain times. This area here shows the time that it needs to be provided. And then it talks about below that, what's the method for complying with this requirement? What do I got to do? Okay, I've got a report, but what do I got to do? And it tells us that the method for complying with this requirement is through this disclosure form. So from here, I can actually click right to it, and it is going to take me right to the form that would need to be completed. So if you just kind of scroll down here, you'll see this is the information that an employer would have to provide to satisfy the Medicare Part D reporting requirement. So really not a whole lot of reporting information needed, but nonetheless, the task has to be completed. So I already, in a previous demonstration, I'm going to hit undo here. In a previous demonstration, I had indicated that this activity had been completed. Now I just undid that. Let's assume I hadn't yet done the task. I would read this, I would do the task, and I would just come over here and hit submit, and my task would be submitted. It's done. So you can see the task now shows up as being complete. So really the dashboard is as simple as that. It really is just a month-by-month description of what needs to be done, when it needs to be done, and how it needs to be done. But I think that one of the biggest components is it helps identify what an employer does need to do, or for that matter, it excludes things they don't need to do. So I think overall it's a really slick tool, and I really think it does help employers with their overall compliance, and then it also does help employees, brokers who do work with employer clients, help them get on board with the overall compliance package. So I'm going to move back to sharing my PowerPoint slide screens. And what I'm going to do, you should now see the back on the PowerPoint side, you should see a slide that says demo. I'm going to just wrap things up now with some Q&A. So if you do have questions, go ahead and type those into your computer in the Q&A function or the chat function. But I've sort of put together a handful of questions that are what I believe to be the more common questions. The first question is, if somebody wanted to obtain this Compliance Dashboard tool, what would it cost? And Compliance Dashboard, if you go to them directly, they charge an annual membership of $999. And we were able to sign a contract with them to get a little bit of a break on that for anybody that wants to purchase this service through our organization. And it is about $250 less. It's a $750 annual membership. We do have some special pricing through the end of the month where we can knock an extra $50 off should somebody want to move forward quickly with it. In terms of how long does it take to set up, it really only takes about 30 minutes at most to get this set up for an employer. You saw sort of an overview of the tool and what questions are asked. So if an employer does know the answers to those, it could really be 10 or 15 minutes to get this set up. But I say just for safety, count on about 30 minutes to get this set up. In terms of users for the account, can an employer have more than one user? The answer is yes. The employer can have as many users as they want. We'll just need to set up an ID and password for each one of those. And the employer will have the ability to do that themselves directly, or if they're having trouble, they, of course, can ask us and we can get a new user added. Then speaking of the users, can you have different types of users? The answer is yes. So you can set different roles. There's 3 different user categories, I'll call them. There's a benefits administrator role, an HR manager role, and then what I call a blended user role. So the benefits administrator role, that's somebody that's really going to be going into this tool and completing the activities, reading what needs to be done, executing those tasks, marking them off that they have been completed. The HR manager role is not somebody, they have access to the system, but they're not the person going into the account and running or executing the task. They're just going into the account really to make sure the benefits administrators are performing the tasks on a timely basis. And then there's the blended user role, which is a combination of both the benefits administrator and the HR manager. So they really have the entire access of doing everything within the system, both oversight of making sure tasks have been performed, as well as executing activities. So that's probably the most popular type of role, but really up to the employer. And then we do get questions, are reports available through the system? And the answer is yes. Reports are available to the HR manager role as well as the blended user role. So there is the ability to just click on a tab and you can generate a Microsoft Excel report, and it'll essentially list line by line what activities applied, were they completed, are they overdue, who completed them, and so forth. So there is a report that is available. And then another question, what if something changes? So change is probably a big word because there can be a lot of changes, but if anything changes to the profile, the employer can go right in the profile and check or uncheck the appropriate box, and then the system's going to automatically refresh. So it refreshes real time. So as an example, maybe the employer did not start the year with a flexible spending account, but in the middle of the year they decided to add one. Well, then the employer would just go into their profile, check off that they now have a flexible spending account, and any compliance activities related to that flexible spending account will in real time be added to their dashboard. One thing that's also come up, and it's actually come up a couple times this morning already, is what if something with the law changes? You know, many of you, of course, are familiar with the election results, and now there's questions about, you know, what's going to happen with the Affordable Care Act, you know, what changes might we see? And we won't know until time passes and the new president and Congress takes over. But as those rules get changed, possibly eliminated, you know, the Compliance Dashboard tool will get updated to reflect those. So as an example, if an employer is subject to the employer mandate, and they have to submit, forms 1094C and 1095C to the government in the month of March. Well, if the employer mandate gets repealed and the reporting goes away, well, that task is just going to fall off of your compliance dashboard, and that's all done behind the scenes with the compliance dashboard folks that are staying on top of the law. So, so a couple different types of changes that could apply. If you do have a request for more information, I know that the demo of the product itself was very short. If you want to take a look at a website, we've got some great resources available to you. If you go to compliancedashboard.net/flex, go there. We've got, number one, we've got some free compliance materials for you on that website. We got, I think, 6 or 7 brochures on there for you. There's a really nice healthcare reform checklist. I talked about, delivering notices electronically and when you can or can't do that. There's a document on there about that. But there's 6 or 7 great brochures I would encourage you to take a look at minimum. Also on there, we do have a 2-minute video of the tool. So if you want to take a look at that video, or you think there's some interest in this and you want to share this information with a coworker, you can direct them to this site and tell them to take a look at the video. But if you really do want some more information, you want a formal proposal, or you want me to go through maybe a 30-minute deep dive demonstration into the compliance dashboard tool, I'd be glad to do that for you, or have somebody within our organization do that on your behalf. At the bottom of that webpage, there's a big orange button that says request more information. Click on that, enter your name and phone number, email address, a couple other things, and we'll get back to you and try to get you a proposal and or a demo scheduled. So with that being said, I am going to open it up for questions to you all. So if you do have questions either about the product itself or about any of the compliance information I discussed, please go ahead and type that into the Q&A function and or type them into the chat function. Let's see. I'm just taking a look. There's a question, just a general question about, can you have several divisions with different benefits? And it depends. If you're fully insured, you generally have to offer the same set of benefits to your employees, but you can differentiate premium contributions and things like that towards the benefits. If you have a conglomerate of organizations with several different companies, you generally can have one set of benefits, or I should say a different set of benefits to employers at each organization. They do allow some separation there. So the answer is it really just depends on the exact situation. And when we're dealing with fully insured plans, we've got to make sure we're complying with what the insurance carrier will allow. When we're dealing with self-insured plans, there's some more flexibility involved there because it really is the employer's plan and not the insurance carrier's plan. Let's see, some other questions. Just looking through. Looks like some of you guys already have the compliance dashboard tool, so that's great. Hopefully it's working well for you. Looks like some of you just need to do some setup. There's a follow-up question to, can you have several divisions with different benefits? Can you use the compliance dashboard tool for this? Not specifically, no. That you'd need to have a conversation with your insurance broker. If you don't have an insurance broker, you can call our office and we'll put you in touch with one that can go through the specific eligibility for that. So the tool is really designed for once you've made your determination on the benefits package you offer, what are your compliance obligations going for there. It's not necessarily a decision-making tool for you to decide how to set your eligibility, benefits, and contributions. So I think that's all the questions I have today. Again, I'm going to go back to the slide with our web address. Please take a few minutes and look at it. Again, at worst case scenario, there's some great compliance materials on there for you. But if you do have some more information you'd like requested, again, that would be the page to go to, and you can request more information. But thanks very much, everybody, for your time. I hope you have a great day and a great rest of the week, and hopefully we'll be in touch with some follow-up with some of you. Take care.